what are the ideas that you would like to share with our viewers today?
290 is a major support for DLF. It's also, I think, if I'm not wrong, the 50-day moving average, support for the stock price. So I'm sensing that if the stock breaks this, level of support once again, there could be one more round of a sharp selling pressure, which could come back into the stock. So a sell on DLF on a conditional basis, below 290, stop loss to be kept at 303, and targets to be kept at approximately 270. The second one, which I'm suggesting, is a buy on ITC. Now, I think yesterday on the chart busters as well, I'd mentioned how the charts for ITC are poised. The stock is forming multiple bottoms at those 200, 205 kind of a trading range, and it's seeing a bounce back yet again on the short-term charts. There was some covering of the call writing as well, which was seen on yesterday's stock price movement. So I'm expecting that probably if that's the flavor, then for the next couple of weeks, and especially in the market which gets more volatile, there is always a tilt and a bend towards defensive stocks. So I believe ITC could stand to outperform from current levels. Targets of 240, more of a positional stock, and stoppers to be kept at 202.
All right, thanks so much for that, Kunal, and make use of the choppiness is what Kunal is saying. I'm going to go across to Ashish now. Ashish, good morning to you. What are the ideas that you would recommend for those that are likely to go more for a long-term investment, a fundamental view, so to speak?
Well, yes, I think as far as the broader indices are concerned, I think the markets have actually done very well over the last 1 year. So no complaints. We have doubled, and nearly all the frontline stocks have given fantastic returns. So I think what appears now is some sort of consolidation. So we do not expect too much of movement on the indices, at least in the near term, and likely to remain range bound. But a good thing is that the mid cap and the small cap space is buzzing, and there are a lot of stock ideas which are coming up. And I think that it's time to be very stock specific in one's approach. Now, like I said, I think there are a lot of stock ideas. So if you're looking for safety and a value pick, then I think the stock which comes to my mind is BSE. Now, the good thing about this stock is that it is actually the Bombay Stock Exchange, which is the country's second largest exchange. So it's a very secular, very strong business, and growing also with more participants coming in, investor community growing. And there's also the very interesting mutual fund platform in which they have got a lot of good traction. And in fact, they are leading in that. They are doing better than NSE as far as the mutual fund platform goes. So overall, also their returns, their results have been very encouraging, both on the volume as well as the margin front. But what is very interesting about this stock is that the main business is available at a negative valuation. If you look at the investments of BSE, which is mainly CDSL stake as well as their cash in the balance sheet as well as other current investments, the net value is 620 rupees per share, and currently BSE is quoting at around 580. So the main business is actually available, not just free, it's available at a negative value. So in fact, theoretically, if you're buying BSE stock, you are getting paid to own a part of the exchange. So it's that cheap. And if you really put a very conservative value also on the exchange, that would come to around 330 rupees per share, and that gives us a target of 950. 950 is a very conservative target. There can be many upside surprises to this. Like I said, the volumes are growing.
Ashish,
sorry.
Ashish, sorry to cut you. Ashish, sorry to cut you. We're running out of time, unfortunately.
Okay.
Let's keep it a little shorter. So BSE is definitely a strong buy from what you're saying, and the valuation picture definitely does look attractive. Let's talk about the next option that we have.
Yeah, okay. Just to wrap up BSE, the trigger could be whenever NSE comes for a listing, that could re-rate this stock in a big way. Now, the second idea, which is a little riskier idea, is Idea Vodafone, which is risky because still the company is in doldrums, looking for some fund infusion. But what gives me confidence is that the telecom industry itself is getting traction, margins are improving, the health of the whole industry is improving, and since Idea Vodafone has managed to survive this big storm, and has two very strong promoters in the form of Vodafone and Birla Group. So chances of the survival are increasing with every passing day. At 10 rupees, it represents a very good risk reward paradigm for somebody who is ready to take some risk but wants a very high return in return of that. So I think the riskier idea could be Idea Vodafone. Their results have also been encouraging. Margins are improving. ARPU is improving. Volumes have also gone up slightly, and the churn ratio is importantly reducing. So I think this could be the idea for investors who want to take some risk but want a higher return.